Hello and welcome to the Weekend Investing Daily Byte of 9th of August, and a good day after some tentative 2-3 sessions where it was difficult to point out where the market is going. Today the market decided to hit a 6 from the very first minute, opened gap up and stayed virtually much higher than yesterday's close. So that was the highlight of the day, that all segments, large, mid, small caps, remained buoyant without any major damage anywhere. And that seems to suggest that the weakness that we had in the last few days seems to be gradually ebbing. And the fact that good numbers projected by RBI, good sort of assurance by Bank of Japan that they're not going to increase any further. 75% of carry trade, JP Morgan says, has been wound down. So all this and remarkable recovery in US stocks yesterday caused this revival of the spirits of the bulls today, and mostly all sectors turned into green. Uh, okay, so we are celebrating the second anniversary of MI India Top 10. Is one of our popular strategies. You can use a top 20 for a discount for the next few days. The topic that we have for discussion today is on SGBs. I think government has, or RBI has decided not to do more tranches, at least as of now. We will possibly come to know by September end if there are going to be any new issuances. The murmurs are that SGBs have been a very big mistake, uh, given the fact that the cost to the government to raise this money, to issue these bonds, have been upwards of 13%. If government is able to raise at 7%, I mean, it is virtual shooting yourself in the foot to raise money at 13%. Of course, it did help at that point of time when they started to issue the SGBs, because India's current account was in a bit dire strait, and people were worried about the dollar depletion due to gold buying. But that situation is well taken care of. We have fantastic reserves now. Um, the duties have also come off from 15% to 6%. And it seems to me that it will not be in the best interest of RBI or the government to issue any more SGBs. Of course, as investors, it was a beautiful product. It is still a beautiful product. It is a unbelievable product where you get gold's return plus interest on it plus tax-free benefits. So today in discussion today, we will compare different different types of gold, their tax implications, the returns for this recent series of SGB, and just which type of gold should one buy in general. I'll do a small session on that. But first and foremost, please subscribe to the channel if you haven't. That will be a great motivation for us. Where is the market headed? So market's not really, sort of taking off, but still I would say ending at the top edge of the last four sessions, having a very small body. So the high and low of the day were extremely tight, and that usually is a good sign that volatility is ebbing. And we are at that sort of cusp of just one more decisive move, and then the ball starts rolling again. So it is not yet there, but it does look like that we are edging towards that point. We are not slipping down. I mean, that part is definitely there. And so if we see what has been the damage done in August, we are back to where we first were in mid of July. So from the perspective of losses, maybe 3 weeks of gains have been lost in this last 4 or 5 sessions of downswing, but now we are trying to make up for that. So Nifty plus 1%, more than welcome. Nifty next 50 also sort of a doji, opened high and closed right there, 72,700, gradually inching up into that gap, 1.24%, still a bit edgy, but a lot of worries probably are behind us for now. Mid caps, same story, small candle, slightly up from yesterday, 0.76%, gradually into the gap. but not really shining there. Small caps much lesser than mid caps, 0.64%, staying well below this average and well below yesterday's high also. So it is tentative, yet it is optimistic at this point of time. Bank Nifty had a nice gap up, stayed up, closed much higher than yesterday, 0.65% gain. But again, this is all within the realm of last 4 or 5 sessions range. All of these indices, nothing has really gone out beyond the range of the first 2 days. So from that perspective, still tentative to some extent. Today's heat map nicely green. Infosys recovering after yesterday's drubbing. State Bank of India nicely up 2%. Reliance up almost 2%. Tata Motors, Mahindra nicely up 2.5%. Uh, and you also had some good gains in Asian Paints, Nestle, um, and Bajaj Finserv. Um, Shriram Transport also gained 3% right here. And I think Hero Motors also moved up 8%. TVS Motors moved up 5%. The Nifty Next 50 heat map had some fantastic gainers. So Trend post its result. The results were blockbuster results, moving up 11%. And Trend has been a phenomenal, multi-bagger in the last few years. And on top of that huge base, it continues to churn up. Naukri up 4.3%. Zydus Life also good results, up 1.6%. Canara Bank, Bank of Baroda, all the PSU banks doing well, along with some public sector enterprise stocks, HL, BEL, PFC, REC, etc. Motherson, Siemens also moving up gradually today. Sectoral trends, you had all sectors in green. FMCG, pharma, banking were the sort of the least gainers, and PSU banks remained the top gainer. Autos remained, along with real estate, the second and third position. IT at 1.6%, energy at 1.2%. So a sort of a consistent move in higher risk, if you may call that high beta sectors, moving in the green and reducing the losses for this last week that were there. On the monthly also, most sectors are in the green. Some sectors are still deeply in the red, namely real estate and metals. So gradual recovery, hopeful of more recovery on the way, but still slightly tentative. PSU banks, 1.92% up, still stuck in this range that started from February, so no escaping that. But today was a decent day for PSU banks. Autos tried to move into this gap, and see, gap movements normally should, be strong enough so that the gap gets closed very quickly. It didn't seem like that today. So there is still more strength needed for, either this gap to cover, or maybe we are fooling ourselves by thinking that the market has started to go up and it will just plonk down. I don't know the answer to that, but the next few sessions should clear this picture. Ola Electric Mobility Limited, running and racing from the very start. 76 rupees open, closing at 91 rupees, hits 20% circuit. The listing was poor, but the punters really decided to have a go at it today. KFintech was another stock which was crazily up 18.3% up today, and for the week also it has gone up quite remarkably from 840 rupees to 1,000 rupees here. So a very nice chart, virtually no drops in this chart since 2023 beginning for this stock. SGBs, good things don't last. This is my personal view. I am not saying that there will be no SGBs as per any announcement. This is my guess that SGBs have seen their last. There will not be any further tranches. A guess uh, that I'm making basis the fact of uh, you can say practicality, that government need not raise money at whatever 13-14% if it can raise at 6 or 7%. It is stupidity to do that in my view. But of course, from an investor's perspective, this is virtually free money, uh, the additional part of it, and more of it is most welcome. So series 1 of the sovereign gold bonds issued in July 2016 has just been redeemed this week. So August 5th, redemption was there, and this is sourced from a Zerodha article. Um, so 8 years people held on to this bond, um, and the redemption price was calculated basis the last 3 sessions of the previous week. So the Wednesday, Thursday, Friday closing, and the closing is taken for gold closing on IBJA website. So IBJA is Indian Bullion Jewelers Association. So ibjarates.com is that website. You can go and see the daily 5 p.m., 5:30 p.m. closing rate there. And that is the average of 3 days before the redemption week is the average based on which the redemption is done. So if we were to compare this redemption of 8 years versus had we bought gold in physical, had we bought gold in a gold fund or a ETF, or in jewelry form, what would have been, the different outcomes? So sovereign gold bond, this was, uh, as I said, issued in 2016. So 11.96% is the outcome of it totally, including the 2.75% coupon you had. The taxation on this was nil on the capital value. So the 6950 or whatever is that final redemption per gram figure. So there was no tax on that on maturity, and you paid interest at slab rates on the 2.75% coupon that you got every year, paid half yearly. The merit of gold bond, of course, is that it is digital. uh, it is safe to the extent that your counterparty is RBI. So if if I say that there should be no counterparty risk to gold, here that risk is there because RBI is the counterparty and the government can always change rules retrospectively. So that risk remains in sovereign gold bonds. But for all practical purposes, you can't get a better counterparty than the RBI. So if RBI, just for the thought of it, goes bust, everything anyways goes bust. So from that point of view, it is a the best of best paper. And um no tax on maturity, low liquidity till 5 years, but post 5 years you can do preliminary or early redemption at the end of each year. So fifth year, sixth year, seventh year, you can redeem if you want, and that's the beauty of sovereign gold bonds. 146 tons of sovereign gold bonds have been issued till date, of which 3 series have only been redeemed so far, 3 or 4, I think. And there is 140 tons to be redeemed in the future. The government probably is having cold feet in terms of they would have never thought that when they're issuing this at 2600 or 2800 per gram, that someday they will have to redeem at 6500 or 6900. And who knows, by 2032, when the last sovereign gold bond existing redeems, what will be the price of gold in case there is some world war or something like that? I don't know. So, so the government is sort of the naked seller here. They have not, as per any announcement or report, not taken a hedged position against this exposure. Yes, the gold reserves of India, RBI is going up gradually, but that has nothing to do with sovereign gold bonds. I think that is in a different category, and it's a percentage of that entire reserves. This is almost like India government shorted gold, and you have gone long gold, so obviously they have been caught on the wrong foot. Anyhow, the second option could have been if you had exactly for the same period bought gold ETFs. So several asset management companies like Kotak, Nippon, many others have gold ETFs. ETFs are basically exchange traded funds. So they work just like stocks. You can go to your broker interface and you can look at this stock as a stock. You can select it, you can buy it, it comes to your demat account, and you can just hold it. So the return here has been about 9.35% per annum for the same period. So earlier it was 11.96 including the coupon. Here it is 9.35% per annum, and this is pre-tax. And then you pay 12.5% tax on it, LTCG. And the fact, because This one had a 2.75% coupon. Here there is no coupon, and additionally you have a 1% or 0.8% expense ratio, because these ETF producers, the asset management companies, will also want to have their own uh, sort of commission on providing you with this product. So they eat up 0.5% to 1% per annum. The merit is that there is decent liquidity. You can liquidate at any point of time. And now the new rules on LTCG also allows you 12.5%, so which is not bad in terms of 12.5%. The demerit versus SGB is that there is no coupon, and the expense ratio is there. Physical gold in the same time period has accumulated about 10.1% per annum. Uh, this normally is lower than the very long term average of 11.7%, largely maybe because one is the impact of this 9% cut in duty just few days before this closure. So that would have eased out about 1% per year from this. And from July 16 till about 2018, gold was in a total dull period. So maybe there was no return in those 2 years. Anyhow, so the merit of physical gold is that physical gold is the, like, if there's a hierarchy of uh, what is the best way to hold gold, then physical gold is at the top of that hierarchy, because the basic feature of gold is that there should be no counterparty risk. If you have gold in your hand, it is your gold. If it is in somebody else's hand, it is their gold. So India's reserve sitting in Bank of England is stupidity in my opinion, and thankfully 200 tons of them are getting are traveling back to India to be in our own possession. So whoever has the gold is the owner of the gold, is the the nature and the law of the human race. And so physical gold is something that has no counterparty risk, and everything else, all asset classes have counterparty risk. Even the house that I'm sitting in has counterparty risk because it is registered against my name in the municipality, and that is the only sort of uh, you know way of proving my ownership. Um, if for some reason it shows some other name, if it shows your name, technically it becomes your house, even though I have physical possession of it. So there is counterparty risk. Your stocks are sitting in a demat account which is owned by a depository participant. Technically, there can be a electronic fraud, and tomorrow that demat account may show your account as nil. You can fight a case, and maybe there will be some recovery, maybe there will not be any recovery. There is a counterparty risk. Even the money that you put in the bank, you think you're putting your money in the bank, but actually you are lending money to the bank and you're getting interest on it. So there is a risk involved there. In India, we've never had any major bank default on deposits, but technically it is possible that the bank tomorrow says that we have gone belly up, sorry, we cannot return your money. So all these are counterparty risks. We don't consider them risks because it has never happened before. Uh, or the government assures you that in case some bank goes belly up, we will make sure that your deposit is safe. But technically, it is a risk. So that is the concept of counterparty risk. I hope you would have understood this by now. So physical gold is something which has no counterparty risk. And let's say people who are fleeing from Pakistan at the time of independence, what were they doing? They left behind their businesses, their houses. Uh, I don't know if there was any stock market running at that point of time, or whatever money would have been lent to other people. There may have been promissory notes. Everything was finished. Just whatever you could grab, gold in your hand, you put it in your pocket and you ran for your life, and you resurrected your life with that. So that is the history of gold for 5,000 years. That whoever has the gold will never sort of see those bad days. Anyhow, coming back to this situation, so direct possession of gold, of course, the demerit is that you will need to keep it safe. There could be storage charges. There is GST when you buy physical gold, and uh, this has taken into account the 3% of GST as well. So 12.5% payable as long-term capital gains is quite decent, I would say. And a lot of folks don't know, but there is a section 54F in the Income Tax Act, where if you are selling any long-term asset and you're buying a residential house, let's say you bought gold for 1 lakh, and 8 years later you're selling it for 2 lakhs, you can sell it for 2 lakhs and put that money towards a investment in a house, and you don't have to pay any tax on that. So 54F is that income tax what do you call it, section. And please look it up if you have never heard about it. This will definitely come uh, useful for you in your life at some point of time. It could, you may be selling long-term stocks, you may be selling long-term gold, you may be selling any long-term asset. It may be a painting also. So make use of that section. Gold jewelry. Okay, now a lot of times we buy gold in form of gold jewelry because people in our house insist about that. And so here the additional charges are based on the making of the jewelry. So assuming 10% is the making of the jewelry, and some exchange loss, some wastage charges, some GST, uh, uh, you get about 8.8% per annum post. And there possibly is no tax on exchange. So if you're returning old jewelry and buying new one, so the only sort of thing is that this is, while it's an investment, but majoritarily see it as consumption. And in times of stress or distress, you could use it for its value also. So that is the format of gold jewelry. But from a purely from an investment point of view, this is probably the worst format of investing in gold. So this is the comparison returns for the same time period: 11.96% on SGBs, 9.35% on uh, ETFs. Physical gold is at 10.10, and gold jewelry is on 8.8. There is a different liquidity, consumption, or storage issue. Uh, there are merits of SGB, there is merits of physical gold. So no one item can said to be the best for all features. This is different. So I may value liquidity more, so I may go for an ETF. You may value the trouble of storage more, so maybe you can go for SGBs also. I may value the no counterparty risk the most, so I may go for physical gold. You may value to please your spouse, you may go for gold jewelry. So different solutions for different folks. No right or wrong answer here. I think um, let us know which form that you have preferred to buy gold in. First of all, do you have gold as investment? How much of percentage of your net worth are you invested in gold? What format of gold? Do discuss it in the comments. You will learn from others also. My thumb rule, which a lot of people laugh at me for, my thumb rule is that whatever is your net age divided by 2, that much percentage of your net worth should be in gold. But different strokes for different folks. Don't believe what I say. Ask your financial advisor, and he or she should be able to guide you what is the best percentage and format for your gold investing. Thank you so much for watching. I hope this would have covered a lot of the gold questions that are always coming for me. I'm happy to share whatever little knowledge that I have about these things. My knowledge is also not complete. I keep learning every day, and the interaction that I have on comments also helps me learn. So please keep sending in your comments. I like to read them, and I also try to respond to each of them. Do like and share these videos. If you can help us get to more people, my team will be most happy on that. Thank you so much. Bye bye.